the global financial system has long been dominated by the US dollar. For decades, the dollar has served as the primary reserve currency, the medium for international trade, and the benchmark for global financial transactions. In recent years, however, the rise of China and its economic ambitions have spurred intense debate about whether the Chinese yuan, or renminbi, RMB, could eventually dislodge the dollar from its dominant position. Despite China's rapid economic growth, efforts to internationalize the yuan, and high hopes among policymakers, a number of fundamental obstacles remain. These obstacles are quite high, and China's chances of actually meeting it is quite low. So, let's try to understand these barriers. Before that, we must first try to understand where the dollar and China's yuan is currently at, so we can see just how far China has to climb in order to replace the US dollar. Here's a graph on the share of central banks' reserves by currency as of September 2024. Here you can see that a lot of central banks' reserves are composed of many currencies. You can see the dollar, the euro, and even the Japanese yen. But here you can see that China's yuan only accounts for just 2% of the world's total central bank reserves. The US, on the other hand, accounts for a massive 58.85% of the world's central bank total reserves. That's a substantial figure and makes China's yuan far, far below. That is an unfortunate fact, even though China is now the world's second largest economy and is even the world's largest exporter. But then again, what does this really mean? Well, let's break it down one by one. A country's foreign reserves are the amount of foreign currency it holds to support its economy. Central banks keep these reserves to stabilize their currency, pay for international trade, and manage financial crises. If countries don't have foreign reserves, then they wouldn't be able to support their economy. Hence, holding foreign reserves like the US dollar is essential for economic health. So, why is the US dollar then the primary source as a foreign reserve? Well, that's because the US dollar is the most trusted and widely used currency in the world. It has been the global standard for decades. One can say that it's simply because of the US economy. It is the most stable in the world. It has strong institutions, a transparent financial system, and a legal framework that protects investments. Many countries trust the US dollar because it is backed by a government with a long history of economic stability. You can even see this in the amount of money flowing inside the United States. Here's a graph on the foreign direct investments net inflow on the balance of payment data from the World Bank. Here we compare the amount of foreign direct investments that went into both China and the United States. You can see that, even though China's domestic market is rich in growth and population, investors are still flocking into the United States. As of the latest year available for 2023, the United States received net inflows of FDI of over $348 billion, whereas China had only received a small sum of FDI of just $42 billion. The reason why this is so important for a country's currency is simply because foreign direct investment strengthens the demand for a country's currency. When global investors pour money into the United States, they need US dollars to buy assets, set up businesses, and engage in transactions. This steady demand for dollars reinforces its global dominance. In contrast, China's limited FDI inflows mean fewer international investors are actively using the yuan, reducing its chances of becoming a widely accepted reserve currency. Secondly, while reserve and demand for a country's economy is important, there's also the fact that the dollar is still dominating the global currency usage. Here's a graph on that matter, data from the International Monetary Fund. Here, you can see that as of the latest year available for 2022, the share of global usage for the dollar is a massive 65.9%, whereas China's yuan sits at just 2.7%. This is again true despite the fact that China's economy surpasses the European Union, and also the fact that they have more share in global trade than the United States. Again, the reason for this usage in the US dollar is because the US dollar is deeply embedded in the global financial system. They don't just receive more foreign investments. One big role is being played here, and that is in critical industries like energy, agriculture, and manufacturing, which is conducted in US dollars. This is especially true for oil and gas, which are priced and traded globally in dollars, a system known as the petrodollar system. This petrodollar system is one of the strongest pillars supporting the US dollar's dominance. It ensures that global demand for dollars remains high because countries need it to buy oil, the most critical commodity in the world. This all started when the United States struck a deal with Saudi Arabia back in the 1970s, along with other major oil-producing nations, to price and trade oil exclusively in US dollars. This forced every country that imports oil to hold dollar reserves, which further entrenched the currency's role in global finance. Now, before we immediately conclude that the US dollar will reign dominant and China won't, it is also important to acknowledge that there are specific areas where China's yuan is gaining ground. Here's a graph on the cross-border receipts of the non-banking sector in China, by currency, data from the State Administration of Foreign Exchange. What this graph is about is how much foreign currency is being used in transactions involving China's non-banking sector. For example, it can include trade payments, foreign investments, and financial transactions made by businesses that are not part of China's banking system. This is important because it shows how much the yuan is being used internationally outside of China's central bank control. Now, you can see that back in 2018, the USD far surpassed the RMB and any other currency. Yet, as of the latest year available for 2024, the RMB has now surpassed the USD. This simply means that China has successfully increased the use of its currency in cross-border transactions. More businesses and foreign partners are choosing to settle trade and financial deals in yuan instead of the US dollar. This is a major shift, signaling China's growing influence in the global financial system. Here's another graph for the same one, but instead of receipts, it's payment. The difference here is that receipts refer to the inflow of foreign currency into China's non-banking sector, while payments refer to the outflow, how much money China is sending abroad. This tells us how much the yuan is being used when China pays for imports, investments, or foreign services. Here you can see that it's exactly the same thing as receipts. China's RMB is now being used more for paying in imports, investments, or foreign services. This could mean that other countries are becoming more willing to accept yuan as payment, rather than demanding US dollars. This shift suggests that China's efforts to internationalize the yuan are seeing some success, at least in specific trade and investment deals. But while it is true that these countries are now accepting the RMB, it's also because of the recent conflict between Ukraine and Russia. China's currency received a boost after US sanctions were implemented in Russia, which limited their ability to use the US dollar. This has then pushed Russia and some other sanctioned countries to rely more on the yuan for trade and financial transactions. With restricted access to the US financial system, Russia had little choice but to turn to alternative currencies, and the yuan became a key option. Now, finally, before we end the video, it is also important to understand the obstacles for China's yuan's internationalization. One of the most significant barriers to the yuan's international use is China's strict capital controls. In China, people can't really move money in and out of the country freely. The Chinese government tightly controls the flow of capital to prevent financial instability and protect the economy from external shocks. However, these restrictions make it difficult for the yuan to become a truly global currency. Secondly, The data that we saw earlier, showing how China's yuan is now being involved in more trade settlements, 53% of China's cross-border transactions. The reality is that the currency remains confined largely to transactions involving China. Thirdly, it is also, of course, important to know that the geopolitical rivalry between the United States and China plays a significant role in limiting the yuan's international appeal. Many US allies, as well as other global financial institutions, continue to rely on the dollar not only because of its economic strength, but also as a counterbalance to China's growing influence. Now, it does not entirely mean that China's yuan will never replace the US dollar. But as long as the US is still the reigning superpower and its regional allies will continue to back it, then most likely China's yuan will not replace the dollar anytime soon. But anyway, do let us know what you think. Thanks for watching.